What's all this business about Goldbach levels?
I'm going to break down ICT's latest trade and show you how he uses Goldbach, aka Enigma, to execute all of his strategies. In this ICT Goldbach video, I'm going to share with you and teach you an extremely advanced Goldbach trading model. Now, Hoppy, if you are not okay with me sharing this information publicly, then just please drop me a DM as soon as possible and I'll pull the video. But the reason why I'm putting this video together is I received a tweet from an ICT chartered student, which you can find on my Twitter. So in short, he's in the ICT chartered program and he's basically sent a public post to Michael saying, you've taken all these trades on your live account and you've shown the executions and I've mapped them all out, but they don't correspond with any of the teaching you have done publicly or even privately to your mentorship students. So what's going on there? You're trading something and you're bragging about it, but you haven't even taught us this. So he's obviously sent it to me because he understands that I had the source, which is Goldbach, and the owner of the source is Hoppy. Now, if you want to get the source for yourselves, you can purchase the book, which also gives you access to the Discord. And the book is basically month 0 of what an ICT mentorship program should be. So it teaches you Goldbach, and then all of ICT's trades are really based off of Goldbach. So there's a link to the book in the description to this video. However, as a big heads up, there are less than 80 copies of this book left at the current price. Once those 80 books have gone, the price increases to $243. So I gave my private community a heads up about this when we were at 100. There's 80 left now, so just a heads up for you guys. So the purpose of this video is to teach you an advanced model because even ICT chartered students are saying, hey, ICT, you're taking trades and we don't know how you took these trades. And we're your chartered guys, we should know the most. It's interesting that us Goldbach traders know more than the ICT chartered students. And that's why we have a lot of ICT chartered students joining us in the Goldbach community. Now, I've got over 100 videos on my channel. If you have found any of my content useful or interesting, or it's helped you to be more accurate in your trading, then I would really appreciate if you could just give me your thanks. So the way you can do that is via my channel. You can just drop your thanks to me, and that would be very much appreciated. That just helps to support the channel. It allows me to focus on producing amazing content for you guys. All these logos and everything cost money to produce, and so does the microphone and the equipment. So if you can, that would be awesome. If not, that's also fine. I hope you enjoy my videos nonetheless. So what I'm going to do for you is I realized that I forgot to break down one of ICT's trades. So I was breaking them all down, but I guess during December I missed one. So I've gone back to it. So this is the trade. Now this is an advanced teaching. So if you are brand new to Goldbach and you haven't seen any of my videos before, you're not going to get this. You're going to think I'm bullshitting. But if you watch a number of my videos and you've seen that I've proven ICT's trades again and again and again using Goldbach, then you're going to have an open mind. If you are in Hoppy's Discord community, I think you're really going to love this video because this is one of the concepts that is difficult to grasp. So this is why I'm producing a teaching. It's a couple of days after Christmas, so this is my Christmas gift to all of you guys. Super advanced teaching on Goldbach, and my use case is ICT, who took this trade also. Now, you can find the video for yourselves. It was on the 14th of December. 12 days ago, so I completely missed the trade. I apologize, so I'm catching up with it now. So let's break it down. Okay, so this is the chart. This is how his video started. He has placed a market order here. Okay, so these are the dates. So the date is the 14th. It was around 10 a.m. 10 a.m. on the 14th, right around there. There's the high. There's those equal 1 minute candles. There's the contracts. That's all the same. As always, you can do this yourself, and I will show you how to do it by first principles, so you can load up the indicator and everything for yourself and verify that I'm not cheating. Now, the levels, let me play the video through. Let's do it on 2x speed. Okay, so this is what he's done, you see? So that's his sell, which I've marked up here. Can you see the same number? Same price. And then he put his stop just above that high. Okay, later on he will show you his TP target, which is here. So I can play this through for you guys. Okay, so this is my man ICT bragging. How do I put this? I'm going to show you how you trade. I'm going to show you how he trades. So it's not, once you know, it's not really very smart to brag about it, because I'm going to show you what he does. Oh, one last thing before I forget. Yeah, so he put this out, I think an hour ago. Someone sent this to me. It must be on his community channel. So nice, a lot of waffle. And then again, he said, I do not use Goldbach levels. For the last time, I do not use them. It's funny, every time he mentions Goldbach, why did he spell it wrong? That's disrespect. He spelled Goldbach wrong. Anytime he mentions Goldbach, my videos just explode. And then as you can see from here, people find my videos, they watch them all, and then they join the Goldbach community. So I want you to keep an open mind, have a look at this trade. Ask yourself 2 questions when I explain it to you. Based on what I'm showing you, does it look like the market respects the Goldbach principles I am teaching? If the market is respecting those principles, does it make sense for somebody who knows about Goldbach to trade using these levels which are respected by the market? Okay, that's all you got to answer. I'm not saying does ICT trade Goldbach. It's a very simple hypothesis. Okay, based on the evidence that I've produced on my channel, over 100 videos, do you think that the market is respecting Goldbach principles as I teach them? And if so, if you had knowledge of Goldbach principles, would you personally trade them, given how accurate they are? And then you can make the third conclusion. If ICT really is the author of the algorithm, and then he should understand how the algorithm works, and Goldbach coincides with the algorithmic movement of price, should he then actually trade Goldbach? Okay, so what is the scientific method? The scientific method is to propose a hypothesis, gather as much evidence as you can that supports the hypothesis, and then allow other people to debate it in an open platform, such as YouTube, and provide their own evidence or counter-arguments on why your evidence doesn't hold. If they can provide counter-arguments, then you modify the hypothesis or find more evidence. That's all I'm doing. Now, as I said, this is a very advanced concept, so I'm going to try to explain it slowly, and hopefully I don't miss bits. Because I always do these videos in one take, and I do miss a lot, to be honest. But then I want to keep you guys focused and engaged. I don't want to go into too much detail, and then you get completely bogged down in the details. Okay, so he took this short. So let's describe why he took this short first. Okay, let me turn off this indicator because this sometimes confuses people. Okay, so the only indicator you need is DMN's ICT AMD Goldbach. Let's now configure the indicator as I always do from first principles, so you can do this along with me. We don't need that, we don't need that. Okay, let's change these labels to white. No, we can leave that there. Now, we are on the 1 minute time frame. If you have seen my videos before, if we are on the 1 minute for NQ, then the 27 is usually a good power of 3 to use. There we go. So we're using the 27. Now let me describe this model to you. So this is a turtle soup model. So ICT spoke about the turtle soup in his private mentorship, but he didn't give you the finer details on why and what is the high probability condition to take a turtle soup. So the issue a lot of ICT traders have, and this is the area that mentorship students come to me for my own Golden Bullet mentorship is they see ICT do things, but his order blocks and fair value gaps and turtle soup hold, but the students, one doesn't. So I've also mentored charter students who had the same problem. But after doing the mentorship with me, it makes sense. So let me show you this. Now, this stuff you have not seen before, okay? You've not seen this before, so it's going to be tough. If you have a copy of the book already, the information is in the book, okay? I don't think anyone's put it together in a video like this, though. Now, these are the levels. So this is his entry. That was his stop. So his stop was there, really, okay? And his TP is at this, he says, is at this liquidity level. Okay, he said it was at this liquidity level. Why I didn't choose this one or this one or this one? I'll show you why later. Okay. Now, some concepts. So let me first show you how sensitive the candles are to Goldbach. See this price here? Matches this price exactly. Is that random? You tell me. Now, the whole concept of Goldbach is the power of three numbers are used by the algorithm. The power of three numbers are 3, 9, 27, 81, and so on. Okay, there's a concept of creating a stop run liquidity. The algorithm likes to create liquidity below the high or above the low, which it will then run later. Now, you have to know which liquidity is the fake liquidity, and this is how you do it. You use the concept of a power of three stop run, which means you measure from the high of the candle, the swing high, the temporary swing high, the fake high, to the high level. Can you see exactly what the number is? 3 ticks. This is a power of three liquidity that was created. This puts you on high alert not to short this, right? The algorithm will come back and sweep that liquidity. This is a big heads up. Look at that, 3 ticks exactly. Then what did the algorithm do later? It came back, swept this. This is great, right? So it swept it into the extension. I've spoken about the extension before. Go have a look at some of my early videos when I talk about the extension. Now, there's a second confirmation. So you have the power of three stop run liquidity that's created. So, and then it swept the liquidity by exactly 9 ticks. Now, I don't trade futures and indices, so sorry, I don't have the right names. I don't know what this thing is. Is that 3 handles, I'm guessing? I'm not sure. I don't know what this thing is called, 3 ticks. But the key point is it created liquidity 3 ticks away from this level, or 3 handles, and then it swept it by exactly 9 ticks, whatever this thing is called. This is your entry signal, right? This is your true turtle soup. Liquidity was created at the right place, and then the sweep happened at the same place, at the right place. This was the entry model he used. Now, he executed a market order, so he got slipped. I would have waited for this candle to close. I would have done my measurements, and then I would have entered. Probably as a market, to be honest, for something like a turtle soup, because you have to wait for the confirmations, you have to measure. Now, let's play the price action through. Now, bear with me, I'm going to put it together like this to hopefully run the tape with you. Okay, so let's have a look. So he marks out this imbalance, this old imbalance here. Okay, I think that's it. 1, 2. Why does he mark this one out? Why does he think it's an important level? He's not said. Let's pray it through. Okay, he doesn't say why that's important. I'll tell you why it's important. Okay, let's mark it out also. If he does not trade Goldbach, why is he marking this out? Here's some more evidence. This is the old imbalance. This is the consequent encroachment of the imbalance. The consequent encroachment is 16861.5. The equilibrium price of this Goldbach dealing range is 16861.5. Okay, you tell me, right, based off of evidence, okay, we have a hypothesis that ICT trades Goldbach. He marked out this imbalance for a reason. I've marked it out, and I've shown you that consequent encroachment is exactly the 50% of the dealing range, the equilibrium. So the consequent encroachment of the imbalance is exactly the equilibrium of the Goldbach dealing range. So going back to our scientific method, does this evidence support the theory or the hypothesis that the algorithm is aware of the Goldbach levels? Furthermore, does this highlight a clue, plus all of the stop runs and the precise nature of them support the theory that ICT is aware of Goldbach? Now let's have a look at his TP. That's his TP level, 16807. 16807. There it is. Okay. Why did he pick this? Okay, some more super advanced teaching. Now, if you have a power of 3, you can have a look at my old video for this. I'm going to do it very, very quickly. If this is a power of 3 dealing range, so let's say this is the 27. Okay, this is the 27 power of 3 dealing range. It is made up of 3 smaller dealing ranges using the power of 3 of 9, and they will fall within it. Okay, now I'm gonna do this very inaccurately, but you get the point. 1, oops, 2, and then you have the middle one as a third one. Okay, and that gives you so within the 27 there's a discount 9, an equilibrium 9, and a premium 9. Okay, now why did he set his TP there? The power of 3 up, so the 27 is part of the 81 dealing range. We get this back up. The 81 is, so he basically wants to take it off at the equilibrium. So this is the premium. As soon as we have the first PD array in the discount, he takes it off. Okay, so he's selling in a premium, and this is the first opportunity to buy back at a discount. Okay, see, look how close the levels are. So let's go back to our 27 so we can continue the discussion. Okay, let's see what else he shows us. 5 contracts, he's going to take off 4 here, and then he's going to leave 1 to run. Anything interesting? So there's the 4 that comes off at the equilibrium. So at the first discount piece of liquidity of the 81 of the parent power of 3. Okay, and then he's just going to let 1 run. Let's see what happened with the 1. So he moves his stop down just in case he gets stopped out. And then I think he takes it off here. Good enough. So he takes it off at EQ. Okay. So this, I know this was a really, really hard, complicated video. My other ones are a lot simpler, but I think the guys in the Discord group will really appreciate this. Anybody who's done ICT's chartered program and has struggled with turtle soups now has the source. So to recap, what I want you to do is I've produced evidence for my hypothesis that the market respects Goldbach and ICT trades Goldbach. So the evidence is we had liquidity, a 3 tick liquidity right below the low. Price then swept it by exactly 9 ticks or handles, or whatever it is. These are power 3 numbers. This is your big heads up as a Goldbach trader that this could be a turtle scoop. We had a fair value gap with the consequent encroachment exactly at EQ, the dealing range, and price. Let's see what it did. How far did it tank? There we go. So look. Now, Do you think these numbers are a coincidence? EQ, the low. Okay, so he traded a fractal 27 in the 81. I'll show you how this works. This is the 81. I'll show you the 27s within it. Okay, there's one of them. There's the second one. Oh, did I not draw the first one correctly? Sorry. Do that again. Sorry. Sometimes my magnet sticks. Okay, there's the first one. There's the discount 27. There is the equilibrium 27. There is the premium 27. Okay, very advanced teaching today. I hope I didn't lose too many people. If you would like to master Goldbach, feel free to have a look at the book, which is in the description of the video. The people who are in the Goldbach Discord, there's only 2,000 odd, and there's about 1 million people who follow ICT. Think about where you are placed within those 1 million ICT traders by knowing stuff like this. Come join us.